Gold. Money day, guys. What's happening? You are watching NFP Friday on 7th of March, 2025. Today, we're going to have a look at some of these pairs. We're going to see, don't switch. We're going to see how the markets are going to react today and see if we can catch any moves. And not even see if we're going to catch any moves. We definitely are going to catch some moves today, for sure. For sure. Guys, if you're here with me, don't forget to leave a like. Subscribe if you haven't done so already. And also, if you want regular updates and you enjoy this type of content, I provide all of this for free inside of my Discord and Telegram. Link to the Discord is in the description box down below. All you have to do is just click the link and it'll take you straight there. All right. Okay. Let's see. NFP, ladies and gents. It looks like EU just wants to completely break out of this level. And I'm pretty sure dollar's getting there. I want to see a push up. I want to see a push up today for sure. For sure. I want to see if we can get slightly higher prices. See if we can get a little something going. If you're in the chat, come say hello. Money day. For some reason, my chat box isn't showing up today on OBS, which is weird. Alright, let's go split screen. We're 8 minutes out from NFP. To be honest with you guys, yeah, what can we actually see here on gold right now, you know? So right now for gold, if we look at it in terms of the areas, the closest areas of liquidities, we've got Tokyo Sessions low made yesterday. Where's my tool? Right, so we've got this low here, right? We've also got, did we take out this high? Okay, we took it out just about this morning. We've also got this morning's London Sessions equal high. Then above that, we've got these equal highs up here. So essentially, here's what I'm thinking, right? If we can actually see the dollar or gold pull back down back to the 8-hour candle, if we can actually get prices coming back down here one more time, right? If we can actually get one more sweep of this low, right? And maybe potentially it's a much deeper sweep, right? Maybe we break Thursday's low, okay, and then start to reverse to the upside, because I do think these highs that we've left behind, these equal highs, are quite juicy, okay? And I don't think gold is just ready to let go of the highs and just start dropping for the lows, okay? So right now, let's just see how that pans out. The other scenario that can play out is we actually just get price pushing up. Right now we are sitting inside of a half-hour candle, so we could actually just push up, okay, continue moving up. That is also a possibility. But when I look at the DXY and I look at the dollar, I just want to see the dollar keep pushing up. Like, this is the last stand, okay? This is the last stand for the DXY, and if we actually get prices lower than this, is looking a bit crazy, right? The only thing that's left beneath this area is this monthly imbalance, okay, and also this monthly low, okay. So last year November's monthly low. That's what else we've got left behind, okay, are just these lows. So Yes, I would like to see the daily time frame hold and actually give us a bit of a pullback because we've just been nothing but bearish this whole entire week. We haven't had a single green candle this whole entire week. Not even one day has been green. Okay, so let's just bear that in mind. And if the DXY wants to break this low, then guys, I think we are in a bearish mode for the dollar. Well, we have been in bearish mode, but we're going to continue being bearish for quite some time. Okay, so essentially we could get a little bit of a play happening here for Euro USD. I do want to play like a daily slash weekly play, right, and short this because it's like when you look at this, guys, we need a pullback, right? I get it, the monthly time frame has pulled back down. We played into the monthly imbalance, which was something I was waiting for probably the most of 2023, 2022. I was looking for these lows. So now that we've gone up here, I do actually anticipate Euro pushing up a lot higher, but I do want to see a little bit of a pullback before we actually get there. So in terms of today, that's what we're mainly going to be playing with, and we'll see how that goes. All right. Um, yeah, that's just all we can do for now. Looking at Bitcoin, Bitcoin did drop again from the same area yesterday. Okay, during Tokyo, we had a very aggressive push to the upside, and sorry, to the downside. And where we dropped off is pretty much where it's like it's okay. If we get lower prices from here, fine. If we don't, then it's perfectly fine. If Bitcoin wants to push up higher, if the dollar does push up, then there is a good chance that BTC will also push down as well. So let's just take our time. As you guys know, NFP, once price starts playing out, we get wicks. You know, we need to give it like, let's just say around 15 minutes to half hour to see how price is reacting and then see the market sentiment, and then we can actually make a decision based off of that. So let's see how today goes, guys. Three minutes, 3 minutes, 3 minutes. Right now, from what I can see, right, even though EU is pushing up, gold is coming down. So I might be right with these lows getting taken, guys. I might be right, but let's just see anyways. Let's just see. Let's see, let's see, let's see, let's see. Because gold is just in a world of its own right now. You know, yesterday I did think that we were going to continue higher and go for the equal highs up above here. But to be honest, when you look at the picture on gold, we've just been stuck inside of this range. Okay, the only good thing is that we've taken out that low there. Okay, on Thursday we took out Tuesday's low. Right, Monday, since we recovered, we've just been stuck here. So I wonder if we're going to get one more sweep of the low and then a continuation, right? Get a nice green candle. The weekly candle looks okay so far, but of course NFP can change the whole picture for gold. So for now, let's just see how this wants to play out. There's a lot of wicks, guys, a lot of wicks. Look at the 4-hour candles, look at the 8-hour candles. There's a lot of wicks, so this can go a little bit either way. Okay, it can go a little bit either way. So for now, the most ideal scenario, yeah, as I told you guys, is we get a sweep of Tokyo's low and potentially Thursday's daily low, and then get a buy move. That is what I would ideally like to see today. If it doesn't play out, if it doesn't go how I want it to, that's fine. But that is what the most ideal scenario is. Okay, I want us to leave this equal highs intact. So that means, you know, what I don't want to see is us wick the high, then come down. Then it's like, okay, cool. Even if we try to take a buy, sure, we can aim for the highs. But it's like, when you have equal highs, they're much more important than just any old regular high. You know, because you've got to ask yourself, why would market come back up here if it's grabbed the liquidity up here already? Do you understand? So let's just see how this does. See if we can break out this little range we've been in. Okay, we're 30 seconds out, 30 seconds out. We are 30 seconds out, my people. Okay, so just so that you guys know, the forecasted is 159K, and unemployment rate forecasted is 4%. Okay. Let's see, guys. Okay, there you go. EU's up, split back down. Okay, so gold is reacting a little bit. Okay, so essentially what we've seen right now is we've had a push up, push down, push back up. Okay, it does look like dollar is going to go for that monthly low. Okay, if dollar keeps pushing down, then gold should be pushing up. Okay, so NFP was actually at 151K, so that is worse than expected, guys. And unemployment rate is also up by 0.1%, so that is also worse than expected. So both unemployment and NFP has been worse than expected. So it's just a weaker dollar, really. Nothing too complicated, just a weaker dollar. Let's see if we get that. Dow Jones stock market is reacting. S&P is also reacting. It's still too early to call exactly what price is going to do, but right now we have had a spike to the upside. So let's see. I don't want today to be a dud day, because to be honest, the best day was what, Tuesday or Monday? I think it was Tuesday. No, it was Monday and Tuesday. Apart from that, what else have we had? Okay, dollar's gaining a bit of strength. Okay. This is something, guys. Okay, so what I can see here for the DXY. Okay, we had this low here, and we've ever so slightly, yeah, guys, ever so slightly, we've dipped that low, and now we're rallying up. Okay, cool. I might just take a little cheeky short on EU, you know, guys. Just a little one. See if this can be a nice little swing trade. Hold on. I hate it when I don't have my meta traders open up. Hold on. MT4, MT5, and one more MT4. Which one's this one? Got that one open. No, MT5. Alright, everything should be open now. Perfect. Does everything look alright? Alright, for sure. Cool. Money day to everyone that's inside the stream right now. I wish I could see the chat box, but for some reason it's not loading up on YouTube or loading up on OBS. So guys, whilst you're here with me, don't forget to leave a like on the live stream right now. Let's see what NFP wants to do, guys. Thank God it's Friday, eh? Are you guys looking forward to your weekends? Let me see if any of you guys said, okay. CJ says hello. Gift says money day. Hello and money day to the both of yous. If you're watching this live stream right now, you're enjoying the live stream, guys, don't forget to subscribe down below, leave a like. And also, if you want to join my main hub, which is Discord, link to the Discord is in the description box down below. Okay, we're watching this a little bit indecisive right now, but bear in mind that the news is actually negative for the dollar. So we can't be surprised if we get bearish price action, to be honest with you. But ideally, we do want to see the dollar push up. Ideally. It looks like today's NFP is not going to really be a continuation. It's rather indecisive right now. Let me stop the music and get some Bloomberg going on. Let's check out Bloomberg, guys.
Payrolls also revised lower. Is there a tell?
Let me know if you guys can hear Bloomberg, yeah?
In the cumulative data about downward
Bryant says price action this week was horrible. Yeah, I mean, if you're looking at gold, it's not the best, but I wouldn't say it was that bad. You know, there was a couple of moves in there. If you were watching it, there was a couple of moves this week for sure.
Giving as many people as many hours as they had requested.
And what makes you say this week's price action was horrible, Brian?
Bad weather in February, and it may be that people who couldn't get to work.
Dollar's down bad, guys.
Restaurant workers and service industry workers, they work fewer hours, and so it shows up that way. That may also reflect a little bit of what's going on with the lower average hourly earnings than expected. But I think the point is, and John was sort of alluding to this, is that at this point, what we're looking at is an economy that hasn't changed all that much, and you can find reasons.
No reaction from Bitcoin so far.
Maybe weather, but you don't really have a whole lot to go on here that tells you which way the economy is going to go from here.
Mike McKee, thank you, sir. Appreciate the update. Breaking down the jobs report. We can continue the conversation now around the table with Stephanie Roth of Wolf Research, Kathy Jones of Charles Schwab. To the two of you, welcome to the program. Stephanie, just first to you to talk about the economy. First look, first take.
Yeah, not expected. And as you alluded, the headlines are very different from what we saw in the data. Big reason is just a timing mismatch, right? The survey week fell just before all of the significant layoffs hit. The next payroll sprint is going to look a lot uglier than this one. So yes, we can't really have a sigh of relief as a result of today's data, because we're going to start getting hit pretty significantly on the payroll sprints. We're going to start looking at payroll sprints that are around 100,000, if not slightly below.
Oh my goodness, did you guys hear what she said?
Yeah, I think the slowdown is taking place, and
she's saying the next payroll is going to be worse than this one. Like, we shouldn't be excited over this data.
You have less aggregate income, and that means less spending power for the consumer.
I mean, if she's correct, then we could see the dollar continue to tank longer term.
Every day is a new policy, and if you're trying to plan business activity going forward, forget the consumer. Do I have a job or not? But think about businesses. What's my labor force?
Can you guys hear Bloomberg, yeah?
What do my materials cost? Can I get my hands on those materials? What's the demand going to look like? I mean, all those are big questions that make people freeze and say,
okay, gold's
I'm
pumping.
just not doing anything until I have some clarity.
Which is the reason why, and Stephanie, a number of people have raised this point. People are trying to understand the momentum heading into this period, to understand the resilience, the potential resilience for the U.S. economy to deal with that kind of uncertainty. 151,000 isn't bad. It actually is a pretty solid labor market. So how much give do we really have in this labor market?
Yeah, and it's fair, but now all of a sudden we had a sudden surprise to activity, and I don't think folks were expecting the extent of the government layoffs that are going to play out, the contractors that are tied to them. And then, by the way, the immigration stuff, he cut off on January 20th. That was adding, for much of last year, about 75,000 workers to the workforce. That's cut off, and their visas are going to start expiring throughout the course of the next 2 years.
But do you think the end destination is still possible? Because what they're talking about is moving from a public policy to more private sector jobs.
Yeah, and that's totally fair, but it's just going to take a while, and it's a painful process along the way. So the end game might ultimately result in a sort of a rebalanced economy, but that doesn't mean it's going to feel good for the next 6 months.
Kathy, this sounds very bullish for bonds, is it?
Yeah, you know, we're still in the camp that says the Fed's on hold for a while because they have to sort out all these cross currents and the inflation potential coming from tariffs. So they can't do anything. So we're in the long end. You have probably the slowdown, which will bring yields back down, probably 10-year around 380 or so. But not until we actually see that data, because offsetting is you have potential inflation from tariffs. So right now we're just bouncing around in this range, waiting to see which plays out first. The inflation plays out first, or the slowdown plays out first. Right now it looks like the slowdown might play out before the inflation, but you know, we don't know day to day what tariffs look like.
If you are just joining us, welcome to the program. The jobs report came out just moments ago, 9 minutes ago, and it came in like this: 151, just a small downside surprise. We were looking for 160. Lots of numbers to talk about elsewhere. To do that right now, we can bring Mohammed Al-Erin of Queen's College, Cambridge, into the program. Mohammed, welcome to the program, sir. Let's get to that jobs report. What's your interpretation of things?
I think you captured it well when you said, you know, no big news here. The only thing that I would be torturing is the labor force participation, but everything else came in as expected. And I think everybody's right in saying What's more
Okay, so
important
right
is
now, yeah,
ahead of
guys,
us,
what
not
I'm
to
looking at,
support.
That said, Mohammed, we've
again,
been
as you
talking a
guys
lot
always
about
know,
the
we need to
momentum
find
in
out
the
if
U.S.
we are
economy
onside
and
or
the fact that it takes
offside,
a long time
right?
to
Whenever
turn
we are
things
looking at these
around. Is
high
there
impact
any
news.
part of this
So right now, I've got
report
this set
that
up
makes you concerned about the
inside as
level of
1 minute imbalance.
exceptionalism
Again,
that we're coming off
these are
of with
things
this
where you have
period
to
of
take a very,
uncertainty?
very conservative entry
Not in this report, Lisa,
for.
but in a lot of
It's
other
not
data
anything
there
major,
is.
major. Looks
The
like we're
edge
going to
of the
hold off of
US
here,
has been
continue
predictability,
higher.
has been
So
transparency,
let's see what
and
the
you're
dollar wants to
starting
do
to
right
see
now.
more and more
We're just trying to see
businesses
if we are
step
onside
back,
or
not
offside.
just on a short-term basis, but really think
You know,
how much longer
the
do
other
we
thing
need
is because
before
now
we
that we've
figure out
taken out these
what's
equal
like the
highs, right,
operating
to the
environment.
left, are
And
we
that
then
doesn't
going to
look
start dropping
really
lower?
likely.
And right now,
So, the risk here
I don't
is
know.
that below the
I don't know,
economic
guys. Let's
exceptionalism,
just
which is
wait and
strong,
see.
strong
Let's
economic
wait for some
performance,
more
strong
price
asset price
action.
performance,
Like
has been
ideally on the
closer to
higher
the
time
US
frame, we want
edge.
higher
And
um
I
we
worry
want higher
that that
prices,
is being eroded
but
right now.
let's just see.
Are you saying it's
4 hour
closer
candle
to
doesn't look too bad
exceptionalism?
as well.
I'm not.
4 hour
I'm
candle doesn't
saying
look too
it's
bad
under
as well.
enormous pressure.
So let's just see,
It
guys.
has attributes that other countries, would dream of. So you don't kill U.S. economic exceptionalism
Does look like
here,
it's gonna
but
keep
it
going though.
follows as people try to figure out what the operating environment is.
Mohammed, we're 5, 6 weeks into a new administration. Has that much changed that quickly in such a short amount of time?
So I think there's been lots of changes. Just go to Germany and see what's happening there. Look at the debate there. It's been a Sputnik moment for Germany in terms of defense spending, infrastructure spending. John, all I can tell you is that all the consensus trades at the beginning of the year have been upended. Every single one of them. Currency, rates, relative US equity performance to the rest of the world. I can go across the board. Every single consensus trade has been upended. And that tells you that there has been significant change.
Which raises a question about how much this is a trade and how much this is a fundamental shift that can actually get implemented in economic data that takes time. And Stephanie, I would ask you that. How long is the transmission mechanism for some of these things at a time when there are some fundamental policy shifts that will take time to implement, but it takes an even longer time to ripple through the underlying data and the underlying sense of strength?
Yeah, it should take a couple of months for us to start to see it reflect in the data. Of course, for example, today, the February data looked just fine. The March data are going to start to reflect this, and I would expect in the next 3 months we'll start to see the real impact. So, for example, the impact from tariffs, that takes about 3 to 6 months to work its way into the CPI data. So that's when we'd start to see that. The payrolls numbers we're going to start to see in the next couple of months because a lot of the job cuts are fairly immediate, and then you'll see the government contractors as a result, the fallout from that afterwards. So I would expect in 6 months' time we'll see a lot more of this truly reflected in the data, but we'll start to see it in the next couple of prints.
Kathy, from an investment perspective, and Mohammed was talking about how the policy shifts have been pretty dramatic and the market is trying to be a
All right, guys, if you're watching the live stream right now, welcome. Go to the chat box, come say hello if you're new. If you enjoy this type of content, more of this content is provided for free inside of my Discord. Link to the Discord's in the description box down below. And whilst you're down there, don't forget to subscribe.
Yeah, I don't think cash is the solution. Because,
All right, so right now we're looking at these gold longs, trying to see how gold's going to react. The euro, the dollar as well, a little bit indecisive for now. S&P, indecisive price action as well. We've just taken out both the low and the high, and right now we're just on the sidelines waiting. So let's see if we can get a little bit of a better picture right now, because right now it's just an NFP candle.
We hope to see an opportunity,
We just
but
need
it's
some more
too
price
much
action.
noise right now to take that risk. And then we're staying up in credit quality because you just don't.
I do want to sell EU though, to be honest with you guys. I do want to sell EU from the daily candle.
Risk. And we don't know what industries are really going to get hit. Some industries are going to suffer. And we do expect some spreads to widen as a result of that.
You know,
Europe's had a long
this
stretch
is
of
something I
things
want
bad,
to do.
and that's changed
70
pretty
pips
quickly.
stop.
Mohammed, to come to you on that, I remember in early November, shortly after the election,
Just need a little
you said to
pullback
us on
here,
this
a little
programme, how circumcised
consolidation,
you hear
and then
is
potential
capital coming in from the
continuation.
rest of the world
Moving
into
on to the
United
next
States.
couple of
That
weeks.
second sound we heard this week was capital going elsewhere, and we've heard that a lot throughout the year so far. Mohammed, what do you think about that reversal in flows that a lot of people have identified recently, and how sustainable do you think it is?
Okay, gold does look like it wants to head up higher, guys.
What has happened over the last few weeks. Is it sustainable? I don't know, John. The jury's still out as to whether Europe is going to be able to go from words to actions. It's not easy politically. It's not easy socially. They have governance issues. So I'm not sure that the reversal sucking sound, if you like, is going to continue for a while, but I understand why. Because there's been a shock to a lot of the conventional wisdom on the US and on Europe.
Mohammed, has there been an end to the sucking sound from the United States?
We'll see the data. I suspect you'll see that there's certainly fewer inflows coming into the US. But has it completely stopped? I really doubt it. The US has some attributes that are very difficult to mess up. So the US is still, whether you want to call it the cleanest dirty shirt or whatever, but it's simply not as clean for outsiders as it was a few weeks ago.
But Mohammed, where was everyone? The president was talking about these policies for months leading up to the election, and then talking about these policies for months between the election and inauguration. Everyone knew what his plan was. Why is everyone shocked?
Sequencing, Anne-Marie, and you talked about it earlier today. So,
wow, some people buying gold right now. What are you guys thinking so far for NFP?
Unambiguously beneficial to the economy.
What do you guys think? Let me know in the comments, in the chat box. Let me know. What do you guys think for NFP so far?
And the hope and the market expected that.
What are your opinions? What are your setups? There's only one setup that I have is EU short.
Go through the detox. We've got to go through the little disturbances.
And to be honest, I don't know if this will play out or not, but that's the only thing that I would actually take right now. Gold could definitely come down. Gold could also push back up. You know what I mean?
Nodding your head away as Mohammed speaking. You agree?
Absolutely. We were expecting tariffs to become a bigger thing for later in the year to tie to TCJA. They're coming much earlier. This has a legitimate impact on the economy. And by the way, the uncertainty is even greater than anyone had anticipated. So to the point earlier on CapEx being sort of stalled out here, it's hard to make any investments when you don't even know what the tax rates are going to be from a tariff perspective. And then they change day to day.
We're reacting to the payrolls report. Next week is the CPI.
Yes, Money Day, Joe. How you doing, my bro?
On a Wednesday. Mohammed, I want to
you good?
Final question. Secretary Besant yesterday at the Economic Club in New York said he'd like Team Transitory to get the band back together at the Federal Reserve.
What are we thinking, guys, for NFP so far? What do we think? What do we think?
Tariffs. I just wonder how you feel about Team Transitory getting the band back together.
Do you know what the funny thing is? Like, I can't expect EU to sell off and then gold to push up. Like, it doesn't make sense, you know? That's rather counterintuitive.
More agile in how they think about passing on prices than they were before. So I think, if Team Transitory gets back together, I wouldn't have them commit to too long a playlist.
It's a good way of putting it, Mohammed. We'll leave it there. Thank you, sir. Mohammed Al-Arian of Queen's College, Cambridge, on the Federal Reserve, on the jobs data, and this market as well. And a special thanks to Stephanie Roth of Wolf Research and Kathy Jones of Charles Schwab. Let's get you up to speed on news elsewhere this morning. Some of your top stories in your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Let's just recap some of the most recent data that U.S. hiring remained firm in February. Non-farm payrolls rose 151,000. That comes in just shy of estimates, the average of which called for 160,000 jobs added. The data for the prior month, that was revised lower. For the month of February, the unemployment rate did edge slightly higher to 4.1%. Elsewhere in corporate news, Walgreens Boots Alliance is going private. Sycamore Partners will buy the drugstore giant for $10 billion. The deal is expected to close in the fourth quarter.
Joe says in the chat box, at this point, there is just so much uncertainty, to be honest. Blow my week yesterday. So I'm done trading this week. What do you mean? Like you had a bad day yesterday?
The aim is to drive down costs and type.
Or is that like your last day trading, Joe?
The bank is telling managers.
Yeah, there's to be honest, Joe, you are right. There's just so much uncertainty happening right now. Trump is just he's doing his thing. Do you know what I mean? A lot of the market right now is not sure which way it's going to go, right? You know, Germany recently, then we have the Ukraine and then Russia stuff as well. So right now we don't know, guys. You know, across the board, we don't know. Joe says very bad, bro. Damn. I hope it's not detrimental to the cause, my bro. What happened? What were you trading? Was it the spoos or was it gold? You know, something that I've implemented recently is just as soon as price is in profit, right? So for example, gold, right? As soon as gold is in profit like 20 pips, I just moved my SL straight to break even because right now no one is sure on what price wants to do exactly. So, you know, for me, it's like, yeah, I'll get here, I'll break even. I'll show you some setups that I took yesterday. So whenever you see these red lines, they're potential entries, yeah, on my charts. So yesterday, I gave you guys a buy move here yesterday, right? That was a profitable trade, took out some profits there. Then we had this pullback play here. So, no, it wasn't this one here. It was, I need to go on a lower time frame. I think it was a 2-minute. Yeah. So then I decided to get in right here, okay, for another buy. Went into profit, whoop-de-woo, happy days. Boom, we get this massive candle. And I was just thinking, here we go again. Right? Gold started to accumulate. And then we had this nice candle here on the 5-minute. So I entered there. Right? Started going up in profit. Right? Broke the previous high. Then what did we do? We came back to entry. And then at that point, I was like, okay, one last go. I bought gold here on the 1-minute. I think the price was around here. I bought gold one more time. Held a little bit of drawdown. Cool. As soon as we went to profit, went break even straight away. Let me turn down the audio here because I think you guys can't hear me that well. So as soon as that happened, I went break even. And guess what happened, guys? Boom. We come back down again for gold. It's like we've tapped this area so many times. And it's like, you know what? I'm done because I keep pushing this. And then one more time when it went deeper, I was like, oh, maybe I should have bought. But then I was like, I'm glad I didn't buy again because guess what? We would have come back down, hit our break even again. And then we started to just range throughout Tokyo session. So, you know, it's just weird right now, guys, to be honest with you. It is just weird right now. We're not getting continuations like we were a few weeks ago. You know, we had some real nice continuations. These type of price action was, you know, really good, really smooth. Even though we had a week of slight consolidation, it was still eventually broke out of it, and then we continued. So, of course, if we are in slightly more difficult markets, that's fine. Could this be a much longer term sell? I'm yet to see. Gift says Trump is messing up the bag. Don't worry, man. Trump will pay dividend. I'm telling you guys, Trump will pay dividends. Honestly.
Don't miss this one. 20 minutes away. We'll be catching up with the National Economic Council Director Kevin Hassett in just a moment off the back of this payrolls report. 151k, really small downside surprise. No big headlines here. 160 was the estimate in our survey. Equity futures going into the opening bell on the S&P 500 shaping up as follows. Equities are just about positive still by 0.1%. On the Nasdaq 100 up by 0.2%.
Okay, gold's kind of dropping, kind of not dropping at the same time. It's a bit indecisive right now.
More executive orders. Look out for that. Sneak peek of next week, Monday. A 2-day EU finance ministers meeting begins on Wednesday. The CPI report plus President Trump's 25% tariffs on steel and aluminum go into effect. On Thursday, PPI and another round of jobless claims. And on Friday, the US government shutdown deadline. Do we need to talk about that?
We do.
Can we avoid that?
I think it might be avoided.
Goodness me. Tyler Kendall joins us now from the White House with more. Tyler, welcome to the program. What are you looking for throughout this afternoon?
Well, throughout this afternoon, we know that President Trump is going to sign some executive orders.
Okay, so we're pulling down lower into this little area I marked out earlier. Let's see if we can get a little reaction. Guys, for today, I would recommend demo. If any of you guys have demo accounts, if you don't, just make one really quickly. It takes like 30 seconds. And just demo trade today. Until I feel a little bit more comfortable with the price action that we're getting, then I'll let you guys know. But it does sound like today will be a potential 3 p.m., 4 p.m. type of move, you know? Because later on at 5:30, we've got Jerome Powell. We've got monetary policy report at 4. And then we got Trump at 6:30. So the day is not done. This is probably just a preliminary for the main event. And I know Trump's going to come out and the dollar's just going to go up. Do you know what I mean? If you guys want to go for a daily swing Trade with me here on EU. Go for it. Take it on your demos for sure.
Well, Anne-Marie, President Trump has said that
I really like this area.
Republicans that he would like to at least see a continuing resolution through September. It does appear that they might be able to get on board with that.
Okay, we're getting a little bit more of a drop here. We've had a little bit of a pullback there as well on the DXY. Played into this little 1 minute candle, pushing off. So let's see.
Indicate to us that Congress knows it's going to take a little bit of time to get through his other policy priorities. It appears Republicans would like to get the government shutdown off of the table for now, kick the can down the road so that they can start trying to focus on some of these fiscal agenda items, such as President Trump's tax cut plan that the president and this White House would like to see get through.
Hey, Tyler, appreciate your time and thanks for this morning. Looking forward to your coverage later on this afternoon. Bloomberg's Tyler Kendall there in the nation's capital outside of the White House. The week is not over. We've still got to hear from Chairman Powell later this afternoon and the President of the United States.
At a time when the takeaway from this labor market report was that the economy is weakening but not weak, and we now have more than 3 Fed rate cuts priced into the market through year end.
Do you remember that Oval Office meeting between the Ukrainian president and the President of the United States?
It seems like it was last year.
A week ago. It feels like
I was at the White House.
Feels like years ago.
Yep, I think we're going to age a bit.
What a week we've had. Look out for this a little bit later, 9:15 Eastern Time. We'll be catching up with Kevin Hassett, the National Economic Council Director. Sneak peek of Monday. Steve Chevron of Federated, Veronica Clark of Citi, and a whole lot more.
Welcome back to another BNP Paribas Open update for Bloomberg TV and radio.
Okay, gold's dropping. Let's see. Let's see, guys. Can we get some shorts on gold, maybe? So far, in terms of the liquidity that we've grabbed, we've taken out the highs. So let's see if we actually want to run for the lows. Does look like the dollar is slightly recovering as well. Look at that 15-minute candle on gold. Half hour candle's looking crazy as well. Okay. Let's just keep watching, guys. Guys, if you haven't dropped a like on the live already, make sure you drop a like on the live. If you haven't subscribed, what are you doing? Subscribe.
How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money in 5 than the iTunes chapter and the post-Napster chapter. But an algorithm...
Okay. I mean, EU is still dropping lower, it looks like.
What you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative as a business.
What makes it India's time?
It's as women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, whether it is in sport, whether it's in medicine, whether it's in creative arts. They are everywhere, and I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think at all these little girls and boys, I don't want to discriminate, who are now in school-going age. Imagine once education, sports, we empower them. What a difference they would make not only to India but to the planet and the world. And the world needs it now than ever before.
turn lower after a miss on the non-farm payrolls. 30 minutes until the start of cash trade. I'm Matt Miller.
I'm Shonali Bassick.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, payrolls missed estimates, but not as much as feared. We're going to get the reaction from the White House economist, Kevin Hassett.
Next up, Fed Chair Powell takes the mic as President Trump's policies inject chaos into the economy and the markets.
And Broadcom delivers an upbeat outlook, reassuring investors that AI spending remains on track. Broadcom shares up 8% pre-market, but you wouldn't know it by looking at the indexes right now. It is all about that jobs print. Let's go there right now. We saw a little bit of a lift after the numbers. We missed expectations, but just so, adding 151,000 jobs. At first, the narrative was, okay, maybe this is good enough to draw a line under those growth concerns, but now you can see those fears really.
Ooh, gold's hitting the deck. Okay. Okay. All right. All right, slow down. Slow down, gold. Let's get a little pullback going. All right, guys. So, right now, what we've just done, right, we had this imbalance earlier that we were looking for buys from. We can see that we've pushed through. We've tested on the other end, and we've dropped off from there. So right now, it does look like the lows are more likely than the highs, okay? So what I'd prefer to do is to look for some shorts. Hopefully, we are able to get into some shorts before we take out Tokyo's low, okay? That is going to be the play. DXY is still pushing higher, okay? Guys, if you're watching the live stream right now and you're enjoying the live stream, don't forget to hit that subscribe button. And also join the Discord where I post regular updates. Link to the Discord's in the description box of this video. If you have any questions, let's go to the chat box. If you're new, say hello. Let's have a chat. Gift says, is Trump talking about crypto? I remember Mark mentioning something along those lines. I think he's talking about it now. I can see here that Trump's got a talk later today at 6:30. I'm not too sure if he is talking now, or I have a feeling like Bloomberg would be reporting about it. Take a look at the SPOOs. Okay. So indices are continuing to drop. All right. If we can get a little wee pullback, I'll be interested in going short on gold. Give that a little go. Well, it does look like we probably won't get that. Ideally, I want to pull back into the range for gold. And then we can give it a standard 40 pip SL. Okay. That'll give us about 4% move that. If we can take out Tokyo's low.
You only saw 10,000 job losses on the federal level, and we've all been watching, Shonali especially, these Doge job cuts so closely, but they really came too late, or the survey was too early to include them.
Yeah, well, plenty of economists would tell you, don't worry.
All right, we're getting a pullback, guys, yeah?
We were talking about the headline number coming in just below expectations.
This is the play, yeah? This is the play. This is the move that I'm going to take right now.
As well, and we heard from Scott Besson 30 minutes, an hour or so before these numbers came out, basically warning of this detox period for the economy. Kind of prescient.
That doesn't sound good. What's a detox period?
You know, Katie and I were talking. It's not good, but the message from the administration has clearly been, take your medicine. It could be painful for a while. Bear with us. Really, it's a patriotic duty to bear with the losses in the market that we're seeing in March.
Yeah, specifically, he said, look, there's going to be a natural adjustment as we move away from public spending, that this market and the economy have just become hooked. We've become addicted to this government spending. There's going to be a detox period, and maybe that's to come.
So to be clear, it's good on the other side of a detox, but while you're in it,
it hurts.
It really sucks.
But you know, it's interesting. It's the worst week for the S&P since we've seen since at least September. Even if we rebound today, it's going to be the end of a tough
Yeah, we're down 6.5% from our highs on February 19th. On the NASDAQ, we're down 9.5% from our highs, so almost in correction territory. And I guess we should talk to Mike McKee.
Yeah, let's get to these numbers. Let's dig deeper with Bloomberg's Michael McKee. You know, to the point on the job cuts, the federal job cuts, how much anxiety does that put on the upcoming jobs report? I know that today you had the estimates all over the place from as low as 65,000
Okay, we're getting our move higher there on gold.
It's going to be hard to know.
Be on standby.
By that time, the problem is
I'm just setting some limits.
and then we hear about people getting rehired, and there's just no clarity yet. So we'll have to wait for that next jobs report to see what's happening in the federal government. On the overall scale, the numbers are still pretty good. The Fed thinks you need around 100,000 or a little less as your replacement figure for people who leave the labor force. So 151,000 is not a bad report at all. And the revisions for both December and January put together were very, very small. The unemployment rate did rise a solid 0.1%. There were more people who were unemployed in the household survey than who were employed. Average hourly earnings, probably a mix of who was hired and who was not and who was unable to work. And hours worked did not change. It fell from December. And there have been people who are thinking that maybe that's a sign that the economy is slowing down a little bit. We'll see. Most jobs created, education and health, that's always the case. Wasn't the case in ADP, but it's always the case. And then in construction, which is a little bit odd given the weather that we had, and finance added 21,000 jobs. It was all those people who wanted to be able to get tickets to Sonali's Invest event. Most jobs lost. Leisure and hospitality, that's weather. Retail, interesting there, drop of 10,000 in Colorado strike against a grocery chain that will be added back in. So that's something.
10,000?
10,000. So that's why we have to figure out. It's a little harder to figure out next month. I mentioned weather, unable to work. 404,000. That's down from January, but it's still a very big number, which is normal.
Let's take this move.
But I did make one last chart for Matt because I knew he would love this. Climate change. When you look at the
I'm in this now myself.
able to work on a month-to-month basis, you normally see in January or February, you can see those spikes. That's the bad weather. But look what we've got in the lower right-hand corner there. That's the last year. We've had a lot of weather events this past year. And you throw that on top of the COVID rebound and things like that, and the data get very hard to predict.
All right. That is really fascinating.
Let's give this a little go, shall we? Let's give this a little go. Woo! Okay. Trying to stop me out quickly, eh? Looks like we're gonna get stopped out.
Good morning. It's good to be here. How are you guys?
Okay.
So jobs number, a couple of things. Number one,
Damn, Gold, you ain't playing games.
a little bit softer, but nothing in that job number makes me think there's any fear of recessions that are screaming through this number. Number two,
Let's see if we can hold.
no large indications of
If we can hold.
departures of
It's not looking good though.
job market, so I think that's a really good sign. And number three, if you look at the 6-month average, the 3-month average,
This 15-second candle looks like it wants to go bullish. Go parabolic.
at a moderation, which I think is a good sign.
Yeah. I think we're done though.
And at the same time, no broad-based job destruction.
I think this is gonna come down though. To be honest with you. I do. Maybe I have to move my stop up a little bit. Realistically, my stop should be above this like 5-minute candle. Like I don't really want to see us push past here.
We've received a lot of data.
Do you know what I mean, guys?
6 weeks that have brought this fear around. I'll call it slowflation, not quite stagflation, but certainly a slowing growth picture. But I want to remind everyone that we came from a very solid underpinning of U.S. economy, right? So when you look at the Q4 data, when you look at the Q4 consumption,
I want to see that 5-minute, this little 5-minute imbalance hold and give us. I mean, maybe this 5-minute candle will close around here. The next 5-minute candle will open bullish a little bit and then look for a closure lower. That's what I'm looking for on gold right now. This wick is insane though. That wick is like 90 pips. So I want to see if we can drop, guys. Yeah. Right now we're okay. We're okay. We're okay. If you were able to get this exact entry, then you can have a 40 pip stop. But for one of the accounts here, I've had to move my stop up a little bit to, how many pips is this? To almost 50 pips, like 47 pips. I want to see if the dollar can start pushing up from here now. Okay, dollar's printing bullish a little bit. I think he's talking about it now. This is next level bipolar from gold. Let's just see if we're right. You know what I mean? If we're right, then we're right. If we're not, then yeah, it is what it is. But right now, we're getting a little push up there on the DXY from that little level there. So let's see if this can continue heading lower for gold without hitting our stop first, obviously. Because the way gold is printing right now, it's like it might still drop, but then take out the SL first. Okay, we're getting a nice push up there. Okay, should be in profit now.
Even without a recession, fixed income makes sense. Gargi, we have to have you back soon. Not enough time. Our big thanks to BlackRock's Gargi Chowdhury joining us on this Jobs Day. Now, coming up, White House National Economic Council Director Kevin Hassett joins the show. You don't want to miss it. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
What mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Live
Live from New York City for our audience worldwide on TV and radio, I'm Jonathan Ferro. Joining us now, I'm very pleased to say, is the National Economic Council Director, Kevin Hassett, following the jobs report earlier on this morning. Kevin, welcome to the programme, sir. It's always great to get your thoughts. I just want to take a beat and take a big step back and just think about where we are and the moment we're in. This is what we've heard from the administration over the past few days. The President has said there will be a little short-term interruption. The Treasury Secretary, Scott Bessent, spoke this morning and said there's going to be a detox period. You said last month the jobs market was worse than markets thought. What exactly are you, together with other officials and the President, this administration, what are you preparing us for?
Oh, we're preparing you for news like today, the great jobs report. I think one of the things that you see, if you look at it, is exactly the objectives of the Trump administration, and the fact that even though we got a lot of work to do, we got to pass the tax cuts and get this deregulation train rolling, is that we're going to be reducing government employment and reducing government spending and increasing manufacturing employment. And as you can see in the jobs report today, you're already seeing a pivot in that direction. That's a huge one. And so last year, 111,000 manufacturing jobs were destroyed by the Biden administration's policies. And in this month alone, in February, we got 10,000 manufacturing jobs and 9,000 auto jobs. And as you know, those auto jobs are, here, they're going to be paid well, and they're here for a good long time. And that's really just sort of a down payment on the Trump policies that are going to skyrocket into a golden age as soon as we get the tax cuts passed.
So, Kevin, I hope you're right, but what I've heard over the last week or so regarding the economic data, when I spoke to the Commerce Secretary, Howard Lutnick, Secretary Lutnick said that this was Biden data over the last month, that this was not Trump data. So if it's good, is it Trump data? And if it's bad, is it Biden data? How does this work?
Let's go into the specifics. So what specifically has happened is President Trump has made a big effort, along with Elon Musk, to find workers that are unproductive and to get them off the payrolls. And so we see government spending going down. So is that a Trump effect? Yes. Manufacturing and job creation in the auto sector is happening because people are anxious about future tariffs, and they're already onshoring production. Is that a Trump effect? Yes. But it's true that we've inherited a lot of terrible Biden policies. They want to, get expensing gone and so on, and that's bad for capital formation. We're going to fix that. So we haven't fixed everything, but already the things that we're fixing, you can see in the data, and I think it's really quite remarkable.
Well, let's talk about the manufacturing data as well. We had that over the past few weeks. You're familiar with ISM manufacturing. You're familiar, I'm sure, with the respondents in the surveys, and this is what they had to say. The uncertainty about tariffs keeps us cautious on spending. Customers are pausing on new orders as a result of uncertainty regarding tariffs. The incoming tariffs are causing our products to increase in price. Are you hearing the same message from businesses? Are you hearing something different?
Yeah, what I'm hearing is a massive amount of onshoring. We've got more than, $1.5 trillion in commitments for new factories, and you're already seeing it in the auto data. I mean, think about it, how hard it is to create a job in the auto sector, and to have 10,000 in a month means that the attempt to onshore activity, to make it so that the jobs are created here and the money isn't just, frittered away to foreign countries, is exactly what President Trump's objective is, and it's right there in the data. Now, I know that it's 1 month and the data can blip around, but I was really, really stunned. And the other thing I was stunned about, which I know you guys follow this a lot. In fact, Anna Wong at Bloomberg is one of the best young economists I know at looking at the numbers, is that it was a really bad flu season. And so when I adjusted for the flu, what I thought this number was going to be, it was way below the number that we got. And so I was very positively surprised by this number once you adjust for the flu. And then you see that all these jobs that are created in manufacturing. And finally, if you go back and look at the Biden job record, mindful of the fact that they revised it down 1 million jobs last year, don't forget that a lot of the job creation was government workers. It was government workers. About a quarter of the job creation over the last 2 years was an increase in government workers. And so if you take those out and then still have a strong jobs number, that's a great economic outcome.
I'm pleased you're in a good mood, because that's refreshing. Because I have to tell you, over the past week or so, Wall Street is full of a lot of gloom right now, Kevin. I'm sure you've heard some of it. So here's some of it for our audience and not just for you. Barclays say US recession no longer unthinkable. Morgan Stanley this morning downgraded growth forecasts, upgraded the inflation outlook. And this is the why. This came from Deutsche Bank. Another talented economist, Matt Lazzetti. Considerable downside risk to the growth outlook amounting. Trade policy uncertainty has hit historical levels. Financial conditions are tighter. Sentiment indicators signal weaker growth, and more trade actions are likely to come. Kevin, the people that we've been speaking to want clarity on trade. They want to understand that maybe in a month or so this will be done, whether the tariffs is 10, 15, 20, 25. When can they expect that much needed clarity?
Oh, absolutely. I think in some sense that you've got quite a bit of clarity already. There's no uncertainty. There's going to be some tariff. It's going to be reciprocal. If you don't like tariffs very much, then reciprocal could be a great thing for you because then countries around the world will be lowering their tariffs. But the president believes that if we replace income tax revenue with tariff revenue, it can make everybody better off. And so if we take $1 away if you buy a foreign good and then give you $1 back in an income tax, you're going to be better off, is what he believes. And I think what's going to happen is that markets are going to watch numbers like the numbers we see today, and they're going to gradually see that President Trump is right. This is how you build a golden age.
All these companies are going to be worried about what's still to come and will hold off on making these decisions because they don't know what policy actually is. A month from now, we'll get more detail on tariffs on the likes of the Europeans. We'll also get an update on what's going to happen with Mexico and Canada. Kevin, can you share with us whether the president has provided any metrics to the Canadians, to the Mexicans, on what they need to get done between now and next month?
I can tell you that we've been in the Situation Room looking at the very best info we could get from our intel agencies on the progress that's being made on the drug war. And that's what this whole Canada-Mexico thing is about. It's about a drug war. And there have been some parameters that have moved because it's an active negotiation. And President Trump is seeing progress of the drug war, both in Canada and in Mexico. And he's, in the end, trying to save the tens of thousands of American lives with this drug war. And that's why he's adjusted when he's seen progress. But yeah, we've got people, satellites and everything, looking at where the fentanyl labs are. And we're making progress. And I think that that's separate from what we're going to see in April, where uncertainty will be resolved because we'll have a report on the Reciprocal Trade Act.
The European issue is different. You've been clear about that, and I think we all understand it. There's been a big change this week over in Europe and potentially in the months and years to come. The Germans are getting ready to spend on infrastructure and on defense. Do you and the administration like what you're hearing from the Europeans in the past few days? And do you think that would lead to a different approach when it comes to tariffs in the next few months?
Right. Absolutely, the Europeans need to make a lot of progress on defense. They've been free riding on America for a long, long time, but they're our friends. That's a foreign policy issue. But on an economic policy issue, think about it this way, that in a typical month, we're importing about $35 billion worth of autos and exporting about $13 billion worth of autos. And that's because of all of the non-tariff barriers and tariffs themselves, like the Europeans have a 10% tariff on autos, that President Trump's views as unfair. And so against that backdrop, the idea that we created almost 10,000 auto jobs this month shows that he's on the case, and he's fixing these things that are unfair for American workers, and he's making progress already in February.
Kevin, do you think the reciprocal tariffs, the focus of them, will be on autos, or is it much broader than that?
Oh, it would be much broader than that, yeah. We basically want trade to be fair for Americans across everything,
Kevin, as you know, there's been some jitters on Wall Street, so let's finish there. In the equity market, we've seen a pullback of 5-6 percentage points. Not too dramatic, but there's certainly some fear out there, and you see that in sentiment indicators. Traditionally, with the Trump administration, particularly in the first term, we became accustomed to what became known as the Trump put in the equity market. Secretary Besson says there isn't one anymore. He says it's all about the upside, and there's a big call. I understand that. But the president said just yesterday, I'm not even looking at the stock market. Kevin, what is the president looking at? And if I can leave the interview here just with this final question, what is his metric for success through this year? What's that number one data point that we should be judging this administration by?
Well, I think that obviously when you're looking at the economy, there are lots and lots of different things that we care a heck of a lot about. For the drug war, the thing we care about is reduction in deaths of fentanyl. In the economy, what we want to do is see a creation of manufacturing jobs, especially auto jobs. And we want to see a successful tax bill. And I think that all of that is going to give us the 3 or 4% growth that we're all hoping for, that we got in the first term, and that we'll get again. But I think that just picking one metric is not enough for the president. But I can tell you that last night when I was in the Oval late at night talking about the jobs numbers with him and telling him about the 10,000 manufacturing jobs and 9,000 auto worker jobs, he was really, really pleased to see the numbers.
Kevin, we're pleased to catch up with you. Appreciate the spirited conversation, sir. Enjoy the weekend. Thank you.
Great to be here.
Kevin Hassett, the National Economic Council Director. Thank you. Guys, I'll throw it back to you.
All right, and that was John Farrow speaking with White House economist Kevin Hassett. Really interesting last question there, too, from John, basically asking what is the one data point that Trump is watching? We've all been wondering what he's thinking about the stock market. We know that he's watching that. We've heard that this
he's not watching the stock market.
No, we heard from Besson yesterday that it's one of the information pieces that he's looking at. We know that this administration is really focused
on the job market. But bringing it back to this employment report that we got, that uptick in manufacturing employment, 10,000 jobs added. That was the note that Kevin Hassett left it on.
Right, I did think it was interesting of John to ask, is good economic data this administration's result? Is the bad economic data the Biden result? Knowing when that tone shifts is interesting, especially when there's so much uncertainty around March. Guys, I also thought it was interesting for him to double down to make sure, where do these tariffs start and stop? It's much broader than that. They want to level the playing field.
Alright, guys. Sorry, I was on mute. Cool. Yeah. So we tried a little short on gold. We went into the teeniest, tiniest bit of profit. Hit stop. I'm looking on my side. It hit stop on 2 of my accounts. Yeah, it hit stop there, and it hit stop there as well. Okay, cool. It's hit stop on 2 of my accounts. We're just gonna leave this for now. Stock open is in about 5 minutes. Yeah, in about 5 minutes. We might have to just leave this alone for now, you know. Because the thing is, I do think this will come down, but the setup has just been invalidated. You know, we haven't held the 5-minute imbalance. We've just pushed through it. So let's just see. Look at that 4-hour candle, doji, indecisive. So let's see, guys. Yeah. Also, that hourly candle is just terrible. Yeah, it's tricky. It's tricky. I mean, you guys know trading red folder days is always going to be tricky anyway. So let's just see. Anyways, I could be aggressive with this, you know. I really, really could. I could be aggressive with this. Hey guys, if you saw what I've just saw, you guys would be laughing your head off. I'm seeing Vel. I'm seeing Vel on the head glitch on Call of Duty trying to kill someone, and he's missing every single shot. Oh nah. I need to watch that back. Oh my goodness. Okay, guys, we're still watching gold. Still watching EU. EU's kind of just pushing back up now. To be honest with you, this price action is looking terrible. It's looking terrible. I definitely do think, like, right now is just the preliminary till later. Because we've got both Fed, Jerome Powell speaking, and Trump speaking at the same time. So, look, I'll stay for the NY Open. We'll stay for 15 more minutes. If we don't see anything, let's just wait till later, like 4 p.m. 4 p.m., 4:30 p.m., something like that. When is this? Yeah, let's wait for like 5. No, it's 5:30. Okay. We'll just wait for 5:30. But right now, the dollar should be coming down. You know, it should be coming down, to be honest with you guys. The dollar should be coming down. You know, if I really wanted to still trade gold, I'll probably take this little buy here. Again, it's like when there's ever NFP or any of these type of news, your strategy can go completely out the window. You know what I mean? Like, as Gifter said, gold just be golden. Brian says gold be golden, bro. Trust me, tell me about it, bro. Gold just be golden. Guys, if you haven't liked the live stream already, like the live stream. We tried to go for a little long on, sorry, not long. We tried to go for a little short on gold. Didn't work out. If you guys are enjoying the live stream so far and you're new and you haven't subscribed, subscribe, click the bell. That's it. And also, if you want to join my private Discord community, the link to the Discord community is in the description box down below. You can just click on that and you can join absolutely for free. It will take you straight there. You can just click on the options, boom, boom, boom. Come say hello, and that's it. You're in. You're locked in. You're locked in with me. Anyways. Right now, let's see. We've got the stock open right now, ladies and gents. Spoos have just been dropping. It's like, guys, I can't sell gold and buy gold at the same time. That just doesn't make any sense. I'm sorry. It just doesn't make any sense. It literally just doesn't make any sense. To be honest, like the week has been okay. It's not been amazing. It's not been terrible either. Like I'll take that. I'll take that. You know, all the people that are copying me on Star Trader, you're all up for the week. At least 5%. You lot should all be up on the copy trader this week. So yeah, we're cool. We're chilling. As I mentioned to you guys the other day, if you guys want to join, it is inside of the Discord. Go to the Get Started page and you can register to start copying one of my accounts. Right now, let's just study price. Let's just see how gold reacts. To be honest, you know, if I zoom out, we're still in this range. We're still here. Still here. This whole range here, we're still here. High, low, high, low, high, low, high, low, high, low, high, low, high. Like we're still here. We're still here. We haven't gone anywhere. So it's difficult right now. Chum says, "Can you turn your volume up? I can't hear you." Really? You can't hear me? Like the volume's almost on max, Chums. Can anyone else hear me, or you can't? Or maybe you sent that because I was on mute. But you guys should be able to hear me. I'm literally looking at my audio right now, and it's in red, saying it's too loud. Let me know. It's like dollar's just gonna keep dropping, you know. That was ages ago, lol. Okay, cool. Yeah. Let's listen to Bloomberg a little bit. I'm gonna turn that up.
Pre-market and indeed post-market yesterday after the bell. This is a company that was sold off more than $200 billion worth in terms of market capitalization only this year. And we were steadied in terms of seeing 19% growth in the fiscal quarter about to come. We're seeing significant, more than 70% growth in AI in particular. And this is where the anxiety dialed back a little bit. Are we just meant to be selling generative AI winners at the moment because we're not going to need as much compute because you've got all of these fantastical models coming out of China that seem to need less data and less compute to still give us incredibly powerful generative AI models? Broadcom managed to steady nerves, showing that hyperscaler demand is still there, showing that networking is necessary, and indeed that people still want to design their own chips. But it's not enough to dial back some of the anxieties more broadly as we head into a weekend where people don't want to be long tech.
That feels like the story of this market right now. It's just not enough. Of course, maybe that relief that we got on the jobs print, it wasn't good enough. What we heard from Broadcom, those stabilization of those fears, it's just not good enough. And I want to talk about how the trade picture fits into the big tech story. We had this conversation with Gina Martin Adams earlier in the week, and I just keep thinking about it, that you don't necessarily think of big tech when you're considering the impact of tariffs. You probably think of more physical goods that, yes, exactly, that we see and touch and feel. But she made the point that you think about the cost of goods sold for a lot of these big tech companies, a lot of that is outside the U.S.
Yeah, and that's why we want to be hearing from Antonio Neri on
Okay.
HPE. What are the cost of goods implications of tariffing China?
Guys, what I'm
What
going to
is
do,
it
yeah,
we're gonna hear from some of the
is
big
if you guys
tech
are not
leaders
inside the
again
Discord
Washington
already,
next week, among them
again,
IBM,
I keep
among
saying
them
this a
Hewlett
thousand
Packard
times, but
HP.
go
What are they
to
gonna
the
say in
link
terms of
in the
ultimately
description box down below. It's the first link you can join. Bodrul says, bro, what's the Star Trader thing? Can't see in the Discord. If you go to the sections of Discord, yeah, you can see it in there. Go to the sections of Discord and go to get started. Sometimes when you enter a Discord, right, you need to click on the settings and click on show all channels. If you don't click on that, you might not see all the different sections of the channel, right? But what I'm gonna do is, Bodru, if you're in the Discord, what's your username, bro? I think I see you here. Okay, cool. So what I'll do, yeah. So yeah, okay, you see it, cool. So just follow the instructions from start to finish, yeah. So scroll to the top and then work yourself down. It'll be straightforward. So what I'm gonna do, yeah, guys, is I'm gonna end the stream here for YouTube, and I will stream inside of Discord later. I'll look at gold, see where gold is. I'll look at Euro USD, look at where EU is, and I'll make a decision based off of that. But as always, guys, I will give you guys updates inside of the Discord slash Telegram, but Discord is the main hub. So if you're not inside of Discord, guys, the link to Discord is in the description box down below. If you are new, of course, subscribe as well and leave a like on the live stream. This is your last chance to leave a like on the live stream before we end it. Before we end it, I'm just saying. I'm just saying, guys. Anyways, I'm just messing about. So let's just take it easy for the rest of the week. If you've had a decent week, amazing. If you've not had a decent week, that's still fine. Just learn from it. It's very, very tough right now, and that's something that I would tell all of yous. It's just a tough time in the market. It is. It's a tough time in the market. There's a lot of uncertainty. So if you are taking L's and if you're not really having that great of a week, it's fine. It's actually fine. There will be better months, better weeks coming, right? So just take it easy, guys. You know, I took this short, took an L on two of my accounts. I'm fine. I'm fine. And the reason why I'm fine is because look, I didn't get you today, and to be honest, I had a lower risk on there, so even if it did lose, I'm not, dying. And at the end of the day, it's like, look, I know there will be a whole week coming, a whole day, even one day coming where gold just moves smooth. We catch a nice continuation, we get an amazing move. 100%, it is coming. So I'm not stressed about this. February was 50-50. We're just a week into March. So, guys, just take it easy, okay? Other than that, guys, money day, money day, money day. Always remember theory behind the practice, and I will see you guys inside of Discord, okay? Peace.